Hello, everyone, and welcome to this session on Algo Trading Challenge 2020. We'll be discussing two major things here. One will be a very brief introduction to the platform that we will be using during this challenge. And the second thing that we'll discuss is the format and the rules and the evaluation criteria for this competition. Okay, so let's start off. The tool that you'll be using for this algorithm is called BlueShift. If you haven't already signed up to participate in this algorithm, you have to sign up for BlueShift. The second thing you need to do is you also need to create a paper trading account with the broker, our co-sponsor, Alpaca. Um, Signing up for both BlueShift and Alpaca is pretty simple. All you need is your email ID, and you just go to the register page, enter your email ID, and sign up. What is not simple is to create a strategy that will make you the winner of this competition. So we'll mostly focus on that part today. So BlueShift is a platform for developing and testing quantitative or any systematic trading strategy, as well as for deploying them. It is based on a few pillars. One of them is a solid research facility backed by minute level data on US and Indian markets, as well as forex markets for as long as 10 years, in some cases even more. And secondly, it allows you to use your backtesting strategy, that is that strategy that you have tested your trading hypothesis on, and without making any changes, take them directly to live trading. By the way, if I'm not audible, please let me know. And also during the presentation, if you have any questions, please type them in. I will pause for a while from time to time to clear off questions if there are any. Okay, so let's take a quick look at BlueShift. This is just to get us familiar. The first time you land up, you either have to sign in. I already have an account, of course, so I don't need to. So I can directly go for the login page. There is a very brief there's a very brief YouTube video there also. You probably can have a look at it. It explains two things. One is a brief introduction to the platform, and secondly, it also explains how to use this platform step by step. So the first time you log into BlueShift, you will land up in a place like this, what you see on my screen. This is what we call workspace. Now, those of you who have just registered or are entering for the first time, they will end up in a slightly different screen, which will be a touring guide of the BlueShift. Uh, which will be a touring guide of the BlueShift platform that will guide you through the different features of the platform. But once you're done with that, you'll be back on this screen. This is called the workspace. If you can hit the home button from any page, you'll again end up here. And this is where you create your strategies and also organize them. To create a strategy on BlueShift is as simple as clicking the Create Strategy button, putting some name, for example, any name you can think of, and picking one of this template. Now, the template is just a starting point. When you create your first strategy, you don't have to start from scratch. You start from already existing code. The idea is that you will modify this code according to your need, and then start from there. To run a strategy, once you have finalized your code, is very simple. To run a quick backtest, that is a backtest that is run in that you get to know the results in real time, but a limited set of results. You can go to the right hand side of the screen and select your strategy parameters, your run parameters. So for example, I'm selecting a strategy run from 1st January of 2016 till the latest data, and you just hit the run. What will happen is that you will be still able to work on the strategy, but at the same time, on the right-hand side, you'll see the results of your strategy. So this is a good way to continue work on your strategy and also see that what is the impact of your modification that you're doing. On the other hand, once you have more or less finalized your strategy, what you want to do is to run a full backtest, which you get on the top, the orange button called New Backtest. The reason is that this mode, the one that is running right now, is called Quick Backtest because it shows a very limited set of metrics that typical quant developers are interested in. Some returns and alpha and beta. Do not worry if you do not know any of these terminologies. We can try to cover them later. Um, so it has a very limited set of extra information that you get to characterize your strategy. But if you run a full backtest, very similarly, then you can get far more detailed results. So right now I'm running a full backtest. It will run in the background. So I got a notification that a full backtest has been given for processing. Once the processing completes, then also I'll get a notification and I can go and check the results. Um, Now, while the backtest is running in the background, we'll have a very quick look at what is happening here. Because throughout the course of next couple of weeks, you'll be required to get yourself familiarized with the APIs of this platform. This platform works with a very simple set of APIs. The best place to get to know more about the APIs is the help section on the top. But before we go there, what we want to do is that we want to see that what exactly is written here. Without knowing anything, can you make something out of it? Can you understand what is going on without knowing anything about it, right? So as you see, if you're familiar with Python, you see that at the top, there is an import statement that is importing a set of functions. And then we are defining a function called initialize. Down below, we have another function called rebalance. Now, the rebalance function seems very small. It's just this much. Let's have a look at it. What it is trying to do is that it is taking two arguments, a context and a data argument, and it's declaring a for loop inside it. And within that loop, it is using this function order target percent that we have just imported before, and placing orders for the securities in a list called context.portfolio for 1 by 10, that is 10%. What it does is that for all the securities, that is all the stocks that you have declared in your portfolio, this function will place an order for them 10% of your current portfolio value. There are many types of other different ordering function. We'll have a very quick look at all of them. But before that, what is this long portfolio? So if we go back and see our initialize function, so then we see that in the initialize, it also takes an argument context. And in this context argument, we are storing a list. And this list is essentially a list of stocks. The symbols are this, Amazon, Apple, and so on. And this string values, the symbols, are passed on to a function symbol, which is again imported on the first line to create a set of asset object that the platform understands. So essentially, it is doing a very simple thing: is declaring a set of symbols, converting them into an object that the platform understands, equity asset object, storing them in a placeholder called context, which is passed on to this function itself. And this same context is also passed on to the other function so that it can access this list that was declared here in this function from the other function. And how this other function is getting called? We are calling an API function called schedule function, which is telling us call this function rebalance, which is declared below, with these rules on date and time. That means for the start of every month, and 2.5 hours before the market close, call this rebalance function. So essentially what it does is that this strategy runs for as many days as you choose, and then for the first of each month, for all the all the stocks in your portfolio, it rebalances them as 10% of your current portfolio value. That means if you have some stock that has rallied, for example, in the past time period, it will be sold a bit so that it comes down to 10%, and some stock which has underperformed, so it has gone down less than 10% of your portfolio, will be bought back a bit so that it again comes to that target level. So this is a very simple strategy. This is usually the basic strategy comparison for any other alpha strategy that we develop. This is called a buy and hold strategy. And also in academic language, this is called a constant rebalancing portfolio. So as we have gone through this very simple strategy quickly, we also see that our backtest is complete. There is a notification on the top. So we can either click here and go to the backtest page, or we can also go through this breadcrumbs on the top, click the backtest. It will take us to the list of backtests that you have run for this particular strategy. So this strategy we just created now and just ran one single backtest. So here we have all the results. So as you see, whatever you have seen in the quick backtest that was running real time on the right hand side, that main chart is already there, but there are far more detailed information and statistics about it. Again, if you do not know all the statistics, the nomenclature or what they mean, do not worry. It's very simple to just look them up. And depending on the type of strategies that you are developing, you'll put more stress on one than the other. And not only you get these charts and the statistics, you also get a list of all the transactions that your strategy has made. So for example, on which date, which symbol was bought, how many at what price, and all that detail. Also, you have tier sheets. For example, over the period of your strategy run, how your volatility of the strategy, for example, fared, and what was your return distribution. Now, if you're not familiar with developing quantitative strategies, these things are very, very, very important thing. Now, unfortunately, we cannot cover all these topics. So what you can do is that you can go and pick a template, run a strategy, and run a backtest on that strategy, and then check the results, and then try to understand that what is the significance of all those numbers that we are producing in this report. And doing this short and very precise research will give you a very good idea about uh, what are the things that matters and don't matter in case of developing a quant strategy. Now, having done that, the next thing that we want to do is that we want to um, quickly go through the help section and see that for all the information that we cannot cover today, where we can get a reference for them. So the best way to do is to click Getting Started on the Help section. So this tells you from the ground up how to use this platform in details. This assumes that you have some familiarity with Python. If you are not familiar with Python, the best thing to do is to click the tutorial section and click on this first paragraph, the first topic, a crash course in Python. Now, in no way this one pager is do justice to the language Python, but what it does is that it gives you a very 30,000 feet level of ideas how Python works and how Blueshift take advantage of that. And then more importantly, it guides you to a set of references here, which you must complete if you are taking part in this competition and you are not familiar with Python. So pick and choose which one you want to. The minimum requirement for being effective on Blueshift is that you have a good, you have a family, a, at least an entry-level familiarity with Python, and more importantly, you are familiar with the NumPy and the Pandas library. For those of you who are already familiar with Python, you'll be asking that what level of Python and what are the packages that we are supporting on the platform. For that, you can again go back to Getting Started and click on this link called Python Support. So as you can see that we have a list of packages that are supported on the platform. If you are trying to import any package that doesn't appear here, you'll get an error. So you must use packages only available here and nothing else. Of course, you can write your own code, but no other packages other than which are already available here. Okay, so now that the Python part is out of the way, um, for the platform itself, the best place is to start from the beginning. So you should quickly go through the introduction and also the quick start guide. The quick start guide we have already roughly covered. Now, developing a trading strategy requires a few set of functionalities. The first function is to define what you want to trade. That is, define assets. So this paragraph discusses that. We have already seen that we can use this function called symbol and use a string which contains the trading symbol of that particular stocks or other asset we are looking for, and we can generate an asset out of it. So this is how we fetch asset on the platform. The second thing is the most important thing is, or one of the most important things is how to fetch data on these assets. So the next paragraph deals with that. So please go through in details. On an overview, it enables you to query data in two different ways. The first way is to use a function called current, and the second one is a function called history. So if we go back to our strategy code, and if we see that the function rebalance, for example, was declared with two variables, context and data. So this data variable will appear in many other places. And this data variable has these functions built in, this current function and history function. So current function, you can specify a list of asset or a single asset to fetch the latest available price on that. History function, you can specify again a single or a list of asset to fetch historical price on that. There are a few examples here. You can run these examples directly to get yourself familiar with how the data are fetched on this platform. Now, once you have defined your assets you want to trade and you also fetch data on those assets, the next step is, of course, being creative with that data and design your own trading rule or signals or alpha strategy, whatever you want to call it. But once you've done that, the next step is to actually place an order, place a trade. So placing a trade is done through a, again, set of order function, uh, one of which we have already seen. So this function, the order target percent, is a function that targets a particular fraction of your portfolio value for the given security. So here, it will target 1/10 of your portfolio value is the holding of that security. It not necessarily be only this functions. There are many other functions available. So for example, you can say order value, and you can provide the name of the asset and the value. It will, for example, if you say order value Reliance 10,000, that means it will try to buy as many shares of Reliance so that the total value of the holding becomes 10,000 rupees. Similarly, order percent is, we have already seen order percent target and the order percent are very similar. Target are a set of ordering function that try to achieve a given target. So that means if current position is away from that, it will buy the increment. Whereas if the target is missing, then the order function becomes absolute. Order value, for example, if you say Reliance 10,000, order value will just go and buy the number of shares that makes Reliance worth 10,000. But if you say order target value Reliance 10,000, then first it will check how many Reliance you already have and how different that from 10,000, the target, and compute the delta and will place the trade only for that delta amount. So this is the difference between a targeting order function or a plain order function. So again, please go through these sections in detail to understand how this works. Typically, you want to place trade for trade with the targeting order functions because this is much safer for a quantitative strategy to use. Why? Because as you see that the target order functions are idempotent in the sense that if you say 10 times order value, order target value Reliance 10,000, it will buy Reliance only the first time, and in all other 9 times, it will see that your portfolio already has that amount of Reliance that you want, and it will ignore the last 9 calls. On the other hand, if you just say order value, it will buy that many number of shares of Reliance each time. So in most of the cases, this is not what you want. You want the first scenario, and that's why it's usually safer, it's idempotent to use this targeting function. So these are the main things about how to fetch assets, how to fetch data, and how to place trades. How to develop strategies is again another matter. Now, if you do not have any background in how to develop a strategy, a very good thing to do is to check out all the templates that you have there. And you can also go to Google, search Quaninsti GitHub, that is our GitHub repo, and click on the blue chip demo strategies. So here again, you have a bunch of different styles of strategies for different asset classes even given here. So this is a public repository. You can go and you can pick up any strategies from here and try to run them. So for example, I can try to run this support and resistance strategies. Actually, I have already done it. So if I go here, this one is probably the one. Yes, so I have already copied the strategy directly without any modification, just copy pasted this strategy here. The only modification I have done is that this strategy was meant for Nifty and Bank Nifty. I have changed the asset from NSE assets to NYSE assets. So I have declared a bunch of stocks. These are the top 20 stocks on NSE. And then I have created a list of securities based on those stock symbols. And if I run this, while you're running your strategy, you have to be careful that the data set that you choose. So for example, these are all assets in NYSE. So if I choose a NSE data set, I'll get an error that symbol not found, because Amazon or Microsoft or Apple, these symbols cannot be found on NSE dataset. Similarly, I should not choose the FX Minute dataset. The only two things I can choose is NYSE Daily or NYSE Minute. If I choose the Minute dataset and run it for this year, that is 1st of January till Thursday, then let's see how does it perform. So we had seen, of course, if you are aware, we have seen a huge amount of ups and downs in the stock market recently, both in domestic market as well as international. So it is very critical for you guys when you're taking part in this competition that you keep this in mind. So if you're backtesting for a long time, for a large case, you will pick up a market condition where the volatility was low and the market was more or less in a very well established bull run, that is market going up. But right now, the market scenario is considerably different. So if your strategy performs great in backtesting, that doesn't necessarily mean during the competition it will run great. So you need to be careful and you need to think about it, that how you can protect or even enhance or leverage the volatility that we are experiencing right now in the market. So this is about how it is. So we see that actually during this recent period, this very simple strategy didn't was not bad at all. It was quite decent. This is a strategy that is based on a very simple technical rules called support and resistance. Um, when you are developing strategies here, of course, you will face difficulties. So you should try to see that what is A, how the API works on the platform, and B, what are the Python packages that are supported here. And of course, if you continue to have difficulty, please feel free to reach out to us. So you can, at any point in time, reach out to blueshift-support@quantinsti.com for your queries regarding any platform aspects, including how to use the platform APIs and other related queries. So what we have covered so far is a very brief introduction to the platform. More importantly, where to seek help. So the first place to seek help about Python is a bunch of reference given in the help. You must be you must make yourself familiar with Python if you're already not. You don't need a very high level of familiarity because you are not going to develop softwares on this platform, but you need some level because the Python and because the platform API works on Python. So this is the first thing. The second thing is that about the platform APIs, again, the go-to place is the help section. So please go through the getting started help. It is a must. After that, it is highly recommended that you also go through the tutorials. So in the tutorials, we have covered two different things. One thing is how to develop a technical strategy step by step. So it will help you a lot if you complete this entire thing. It gives a short background on what is technical indicators. It gives a problem statement, and then it shows step by step how that can be implemented on Blueshift. So it will help you a lot if you just simply follow this. Second thing, you may also want to go through the factor strategies because most of the current available tools on the internet, like Blue Shift, they are not sophisticated enough to cover this kind of strategies, but these are the popular mode of quantitative investment in the institutional space. And this is how a large part of quantitative investments are done. So I strongly recommend you also go through this factor strategy implementation on Blue Shift. But there is a caveat. You can develop factor strategies in Blue Shift, but as of now, we do not support it in live trading. So for only this competition, the factor strategy, although can give you some ideas, but it is not going to be transferable from backtest to live. Okay, so this is all about it. And of course, lastly, if you have any follow-up questions, please write to us at blueshift-support@quanthistory.com. So this is a very brief intro about the platform, what the platform does, and where to seek help. So now coming back to the competition itself, uh, here are the timelines. So from now onwards, you can get into you can get your hands dirty and start experimenting with the platform. You see the template strategies that are already available. You try out the strategies that are built step by step in the tutorial. Also go to the GitHub and see that what you can borrow and reuse, and familiarize yourself and start finally developing the strategies. Uh, the strategy submission on the competition portal will begin on 23rd of March, midnight. So you have just a bit more than a week to develop your strategy and experiment with the platform. After that, once you have submitted your strategy, you can resubmit till 26th of March, again midnight. After that, there will be no submissions allowed. 27th of March, all the strategy will stop executions at the close of the market, that is close of the US market. On 28th March, we'll announce the list of analysts, and on 29th March, the next day, based on the presentations from the finalists, we'll decide the final results and we'll conclude the competition. So the key points: the earliest you can start now, the earliest you can submit midnight 23, the latest you can submit 26th. Rules. Rules are very simple. You can submit a strategy not before 23rd of March. Within 23rd of March till 26th, you can replace this strategy as many times as you want. Remember, you at any point in time, you'll be having only one strategy considered for the competition. If you are replacing that, the one that is replacing the original will be considered. So only the final strategy that is running on the last day or the last run as of 27th, that strategy will be considered. All the results of your strategies that was replaced by you with resubmission will be discarded. They will not be considered for this competition. Also, when you are running a strategy, you must run them with Alpaca paper trading broker selected. For this, you need to create a paper trading account with Alpaca. That will require a valid email ID, and you have to set a password. That's it. It's a very simple process. You can do that directly from within Blueshift, or you can also go to their website, alpaca.markets, and create your own account. All strategies must have initial capital of $10,000. This is very important so that we have a parity of results among other participants. And finally, all strategies must be run with default set of risk control parameters. Unfortunately, the last two things I cannot give you a demo right now because on weekends, Saturdays and Sundays, um, we are not allowed to run a strategy. To run a strategy, what you need to do is that you open any strategy, click Go Live. If you click Go Live, you will have some extra information thrown at you. If you are happy with that, you will land up in the live trading page. Today, I will not be allowed to run a strategy because it's on weekend, but otherwise, you can pick a broker you want to run it with, and you can also pick the amount, the starting capital that you want to run it with, and also you can set your risk parameters. So in that regard, your risk parameters must be default, your starting capital must be 10,000, and your broker must be Alpaca Paper Trading. Now, what is the evaluation criteria? Um, Based on the net account value, the net equity of your strategy. So you start with 10,000 and you lose or you make profit. So it either subtracts or add to your 10,000 starting point. So based on this value, the final value as on 27th midnight, the market close, we'll pick top N strategies. The N will be decided later. Once we have picked these strategies, then we'll apply this formula, which is your net profit or loss multiplied by a factor called stability. What is stability? Stability is the regression R squared of your account values versus time. So for example, if we go back to one of our back tests, let's see if you're, so this one, for example, so we just ran this back test, and if we look at it, we'll see that there is a metric called stability of time series. So this matrix will vary from 0 to 100%. This matrix captures the fact that if I pick a point at the start and pick a point at the end and join them together, my strategy line, the equity line of the strategy, what will be the total error of that from that straight line? So if the equity line looks almost that straight line, so my stability will be 100%. If the equity line looks very different from the straight line, so for example, the equity line go horizontally till the end and then suddenly jumps to the last point, so it's maximizing the error from the distance from the straight line, then the stability will be 0. So the formula will be this stability factor multiplied by the net profit or loss. Why stability factor? Because it shows that how consistent your profit generation is. If your stability is very low and if you have a high profit, that means there is a good probability you got lucky. If your stability is high, that means you have been correct most of the time. So probably it is not luck. Your strategy has alpha in it. So this is the evaluation criteria. Now, in case you have any questions, let's pick them up. So one question I have here is that how many backtests we can run simultaneously? So at present, there is no limit on this, but you must be nice to all the other users of the platform. What we do have is that if your backtest is taking too much time, I think right now the threshold is at 10 minutes. If your backtesting is not completed within that time period, it will be killed automatically. So please keep that in mind. And also, if you are queuing up many backtests, the ones after the first will have lower priority. So we maintain a priority queue. So these are the major restrictions that we have. Uh, the second one is that can I integrate my strategy to Zerodha or other broker? So for this competition, no, you must pick Alpaca paper trading. We do have integration with other broker as well, and we are also adding to that. But for this competition, you must choose Alpaca paper trading. Do we need to set commission charges and slippage in the strategy code itself? Um, so commission and slippage is a thing that you decide to model during the backtest. But in live run, you have no control over them. Whatever the commission your broker charges is the one that you pay. So if you are developing your strategy and backtesting them, it is advisable that you put a commission and a charge model so that it reflects the reality. But if you're going live with that same strategy code, we'll ignore those two functions. So they will be kicked out from the strategy code because they don't mean anything for a live trading strategy. Will there be brokerage charges? Yes. So there will be a brokerage charges for even for paper trading. I'm not very certain that what the charge is. So feel free to sign up for Blue Shift and start modeling it and start running the live paper trading. You will see that actually how much you are realizing. You can run live trading strategy from Blue Shift anytime you want. For the competition, you have to go to the competition portal, the URL of which will be shared later on. You have to go to that portal and launch the live run through that portal. Only then we will track it for competition, and that you cannot do before 23rd. But otherwise, you can directly run on Alpaca paper trading anytime you want after you have created an account with both Alpaca and Blueshift. For the competition's sake, for what duration will our strategy be traded live? So as I said that the earliest you can enter is 23rd, the latest is 27th, that is Monday to Friday. That is that is 5-day week. That is assuming your strategy didn't stop or didn't crash or nothing bad happened. So for that, it will be an entire trading week. But you can change your strategy as many times as you want till Thursday. That is, you can stop your existing strategy and submit a new one. So the existing strategy that you stopped, that will be discarded for competition scoring, and only the last one that you resubmitted will be considered. Uh, can we upload pre-trained model files? No, right now Blueshift doesn't allow any user data upload. So unfortunately, you cannot do that. Is the platform similar to Quantopian? Yes, the API is very similar to Quantopian. In fact, we have made a point to make it very similar to Quantopian for the APIs, because we believe that those are a set of APIs that are very easy to understand and very easy to pick up, even for people who are not familiar with either programming itself or even financial market. But of course, internally, they're very, very different beast. So internally, they're entirely different. But from the API point of view, they're exactly similar. In fact, for the research, it is exactly similar. And for the live trading, it is close. It is not exactly similar, but very close. We have a question called most of the example strategies use 1 or -1 as weights. How can I use custom weights using operator like ranking or z-scores? So if you are familiar with Python, you can pretty much do whatever you want. So there is a difference between most of the other platforms and Blueshift is that it gives you the full control over your strategy. So actually, you can go to our so for example, you can go to our demo strategy folder that I just saw, and you will see that there are a couple of strategies that have different uh, weighing scheme than plus or -1. So for example, if you go to the events folder and click on this webinar folder, so there is a strategy here which uses a sigmoid function for uh, computing the weights. So you see it is no longer plus or -1. So the weight function is a sigmoid function. So you can use this. And again, for example, we have, if you go to the pair trading strategies, then you can see that we have used that Z-score uh, that you're talking about to create weights. So if you go to equities, I'm not sure there is a, yeah, so there is a pair trading example. So we are using entry and exit based on Z-score. So it's pretty much open to what you want. So as long as you're familiar with Python and pandas and NumPy and the packages that you want to use, that is on one side. And on the second side, you're familiar with the API on the Blueshift, you can pretty much code any strategies that you fancy. So there is no restriction. There is no inherent restriction on the platform itself. Then we have a question called what exactly are we required to do, and where do I need to submit the strategy? So what you require to do is that you need to create a strategy on Blueshift, just the way we have demonstrated, and then you would also want to test the strategy to select how good or bad is. And once you have decided that you have a very good strategy, then you have to come to our competition portal. The competition portal URL will be shared later. You have to go there. You have to pick the Algo Trading 2020 challenge, enter that competition, and submit your strategy. It will be once you hit the submit button, you will be taken through the process of placing your strategy live. So if you're not, if you're familiar with Kaggle, the competition portal looks very similar to it. So it is totally, it is totally self-explanatory. So that's the reason why I didn't feel any need to actually demonstrate that part. So all you have to do is to go to that competition portal, choose the competition, click submit, and you will be taken to the Blueshift platform where you can pick your strategy and place the live run, and then you can come back. And you can also see your leader score there. There will be a leaderboard. You can keep track of how good or bad you're doing. And if you're doing not that good as you expect, you can, of course, resubmit another strategy that I mentioned, but only till 26th. I hope that answers the question. So you can submit one strategy and you may choose to not changing it till 27th. This will have an advantage. Yes. Why? Because you potentially gain more because you have run your strategy for more number of days or hours. But at the same time, if your strategy is not making money and you think that you have figured out how to fix that, then it makes sense to change that, because even if you run it for more number of hours, your strategy is constantly losing money, so you will accumulate losses instead of profits. So it's up to you. If you have a great strategy, the best thing to do will be to submit on 23rd. Do not touch it. If you have some hiccups, then probably you should resubmit in the hope that it will catch up. When you submit a strategy, what time period you run it? So as I said, if you submit on 23rd, you can run it till max 27. So when you go and try to submit a strategy, you will see that you have to select an end date. The end date will be automatically 27th. And it is usually the nearest Friday. So on 23rd, the nearest Friday is 27th. So you can choose to have a date which is lower than that. That is absolutely fine. You don't have to run a strategy from 23rd to 27th. All we will do is that if you have nominated that strategy for competition, we'll pick the last strategy that you nominated, whether it is running or whether it is stopped or whether it is crashed or anything has happened to it. Will pick the last strategy that was nominated by you and consider its performance. If you have submitted multiple strategies, only the last one will be considered. Uh, on which universe or strategy will be tested? So it should be on NYSE. So as I said, you must choose Alpaca paper trading as your broker. Alpaca will provide access only to NYSE. So obviously you cannot run any NSE strategy there. It has to be NYSE. It has to be in stocks, not ETFs, stocks like Amazon and Apple and Google. You have to make your strategy based on equities, not derivatives, not futures, not options or ETFs. And equities traded in the NYSE. Please make sure all the stocks you are choosing are part of S&P 500. S&P 500, if you are not sure, is a broad-based index that tracks the US market. If you want to see that if a particular stock is part of S&P, what you can do is that you can go to the S&P 500 Wikipedia page and see that your chosen stock is part of that index at present or not. Someone asked that is the recording available? Yes, I believe that the recording will be available, so no worry about that. How can I determine that the strategy I made was good? That is a very good question, actually. So one way is, of course, to do backtest. But backtest will only tell you how the strategy worked given the existing condition. So as I said that, unfortunately, most of the backtesting that you guys will be doing will be during a period when the S&P was in a steady bull run, and then it will be run between 23rd to 27th of March, when probably it will be a high volatility regime. So you have to test and see that if your strategy makes any obvious mistakes, like whether it makes money, whether it is having too much of downside risk compared to upside. What you can gauge is from these two things, is from the drawdown values and also from something called omega ratio or the tail ratio. You get all these statistics on the full backtest report. So as I said, that please go through the statistics that are reported and try to see that what is the significance of them. It will help you a lot. But at the same time, you have to basically figure out that how to exploit the current market conditions. So very broadly, um, the markets is usually in three phases. One phase where it is in a mean reversion regime, where typically a big rally is followed by a big sell-off, or even a small rally by a small sell-off. The second phase is a momentum phase, where rallies are followed by further rallies, and sell-offs are followed by further sell-off. And then finally, the third phase is the transition phase between momentum to mean reversion, or mean reversion to momentum. So you have to basically make a case that how you can pick up that which phase the market in, and then devise a strategy that exploits the market phase in the best possible manner. Sorry. As I said, someone asked that do you have to make in the NYSE market only? Yes, because this runs will be run on live market data, but without making live trades. That's why they're called paper trades, and they will be made on live market data on NYSE. So if you choose stocks that are not in NYSE, you will get an error and your algorithm will crash. Um, Can I choose any stock listed over there? As I said, not any. You can choose only the stocks listed in NYSE, which are part of S&P 500. If you are not sure of which stocks are part of S&P 500, please go to the S&P 500 Wikipedia page and search. The current membership is given there. Can you choose an index? No, you must choose stocks. So no derivatives, no index, no ETFs. Index are not tradable, so there is no way we can trade an index. You can trade ETFs on index. We do not support ETF as of now. Can you add shorting, leveraging, and hedging? Yes. Hedging, if you are talking about using nonlinear instruments or derivatives, no. So no derivatives, only cash. If you are talking about hedging in some other way, for example, buying Amazon and selling Microsoft as a hedge, then please feel free. Leverage and shorting, yes, of course. Um, you are free to use leverage and shorting. But please remember that if you have leverage, it leverages your profits as well as your loss, because we are talking about linear instruments, stocks. So there is no non-linearity here. Okay, so I think we got almost to the end of this session. I'll take only a couple of more questions if there are any. So one of them is that what I need to submit is just a code which will be run between 23rd to 27th. So no, so you don't need to submit any code. We will not even look at your code. We do not care about your code. And also, more importantly, on Blue Shift, we very much follow the sanctity of intellectual property. The code that you are developing is yours. You have the intellectual property of this code. In fact, if you have really developed a great strategy, there will be many other market participants who will be very, very interested in the strategy, and you retain the full intellectual property of the strategies that you develop. What we want is you go to the competition portal and click submit and follow the process. We will not receive your code. We'll just receive the output of your code, the accounts and the other details that your code is generating, how the performance details of your strategy, and we'll be deciding the winners based on that performance details. Someone asked, can you give some tips to develop a strategy? Unfortunately, we do not have enough time right now because that is a huge, huge thing in itself. So what you can do is that probably you can go through the tutorials, the two tutorials that I mentioned, especially the technical strategy tutorials. That will give you an idea about how to go about developing a strategy. And then the second thing you need to know is that how to create a winning alpha signal. So for that, you have to unfortunately do some research on your own. So in this world, if someone really knows how to make a great strategy, they will be the last one to actually share that with anyone. Because of course, if you have really a great strategy, you can make huge amount of money out of that. So it is very hard to get uh, guidance on this, but there are plenty of articles and the blogs and also research papers available. You can do some research on Google and try to get yourself familiar. Your immediate resources are the tutorials on Blueshift. Also, go through the demo strategies and see that what they're trying to achieve on our GitHub account, and then do your original Google research. And I'm sure that it will not be a very tough thing to crack. I think that is it. The last question is that um, can you please tell me about incorporating broking charges? So yes, so as I said that you can use broking charges using the function called set commission and set slippage. You can ignore the set slippage function for now. You can use set commission, and in the set commission function, as you see here, there is no set commission here. Uh, Yeah, so set commission here it says per share this much. So that means if you put $1, that means per share your broking charge will be $1. So depending on the type of broking you want to model, you can use this set commission function to take care of that. Okay, so I guess that's it. So any follow-up questions you have, please mail it to your coordinator. Um, Hopefully, he or she can combine all of them and share with us. We'll try our best to address them. If you have any questions related to the platform and how to use it, please mail it to blueshift-support@quaninstitute.com. And if you have not already signed up, please do so. Thank you very much. Thanks for your time.